Welcome to Explain the Charts, where we break down the news and chart data to help you make informed trading decisions. Today, October 20th, 2024, we're taking a deep dive into the EURUSD, one of the most actively traded currency pairs in the world. This pair represents the value of the euro against the US dollar, making it a crucial indicator of economic strength and global market sentiment. Let's begin by examining the latest news and events that could be impacting the EURUSD. Recent reports from the European Central Bank, ECB, indicate a potential easing of monetary policy, which could weaken the euro. However, the U.S. Federal Reserve, Fed, is also expected to cut interest rates, potentially putting downward pressure on the U.S. dollar. The outcome of the upcoming U.S. presidential election remains a significant source of uncertainty, with both candidates proposing differing trade policies that could influence the market. These factors, combined with global economic indicators and geopolitical events, create a complex landscape for the EURUSD. To fully understand the current market dynamics, we must turn to the charts, which provide valuable technical insights. Let's start with the daily chart, which offers a long-term perspective on the EURUSD's price action. Looking at the recent trend, we can see a period of consolidation, suggesting a potential shift in market sentiment. The price has been hovering between the 1.06 and 1.10 levels, indicating a range-bound market. Key support levels to watch are around 1.06 and 1.05, while resistance levels lie near 1.09 and 1.10. Breakouts above or below these levels could signal a change in trend, indicating a strong move in either direction. A break above 1.10 would likely lead to a sustained bullish rally, while a break below 1.05 could signal a further decline. However, it's crucial to remember that the daily chart provides a long-term view, and shorter-term charts might offer different insights. Now, let's zoom into the 1-hour chart to gain a better understanding of the shorter-term trends. If we analyze the last few weeks, we can see a distinct pattern of higher highs and higher lows, suggesting a bullish trend. The price has been pushing upward, with multiple breakouts above key resistance levels. The most recent break above the 1.08 level has been particularly significant, signaling a shift in momentum. We can see strong support near the 1.08 level, while resistance is now likely to be found around the 1.09 level. The bullish trend seems to be driven by the recent economic data, which indicates a stronger euro. However, the upcoming U.S. election and potential Fed rate cuts could put upward pressure on the U.S. dollar, potentially creating resistance. It's crucial to stay alert and monitor the price action closely to identify any potential reversals. To gain a more detailed understanding of the immediate market dynamics, we can examine the 15-minute chart. This time frame allows us to see the very short-term price movements, which can provide valuable clues about trader sentiment. We can see that in the last few hours, the price has been fluctuating between the 1.085 and 1.087 levels, creating a tight range. This range-bound movement suggests a lack of clear direction in the market, as buyers and sellers are battling for control. The 15-minute chart can also be used to identify potential entry and exit points for scalping strategies. Looking for strong price action, like breakouts above or below the range, can present profitable opportunities. However, scalping requires a high level of alertness and quick decision-making skills, as price movements can be unpredictable in this time frame. It's essential to use stop-loss orders to manage risk and protect your capital. Let's revisit the 1-hour chart and focus on the last few days. We can see a clear upward trend, with the price breaking above key resistance levels. The recent news surrounding the ECB's potential easing of monetary policy seems to be driving this bullish momentum. However, it's important to remember that this trend could be challenged by the upcoming U.S. election. If the election results in a policy shift that strengthens the U.S. dollar, it could put downward pressure on the EURUSD, potentially reversing the current trend. We should also keep an eye on the Fed's rate cuts, which could further weaken the U.S. dollar, strengthening the bullish case for EURUSD. The next few days will be crucial for determining the fate of this trend, as the market responds to these events. To summarize, the EURUSD is facing a complex market environment with both bullish and bearish factors at play. The daily chart indicates a potential change in market sentiment, with key support and resistance levels to watch. The 1-hour chart shows a clear bullish trend, driven by recent economic data and the ECB's potential easing of monetary policy. However, this trend could be challenged by the upcoming U.S. election and the Fed's rate cuts. The 15-minute chart shows a tight range, suggesting a lack of clear direction in the market. The next few days will be crucial for determining the direction of the EURUSD as the market reacts to the upcoming events. Traders should stay alert, monitor the price action closely, and use stop-loss orders to manage risk.